The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good morning from TFNN. Welcome to the April 10th fantastic Friday edition of today's opening bell on the Trader's Edge. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope that each of you had a terrific Thursday. It is fabulous. It is fantastic Friday. That means let's make sure that we have an extraordinary weekend. Of course, the easiest way to always do that is to remember that life happens for us, not to us. That's right. Little 2x4 exchange out there, and it means that you and I, we can find the gift in every set of circumstance that life throws at us. And that's what the rule of the markets is. It's supposed to test us each and every day. We've got something for bulls. We've got something for bears out there. And you and I, we go on a safari, and we can go looking for it. And I'm grateful for your presence here this morning. Now, I'm here to serve you. That means you can pick up the phone and dial on in at 877-927-6648. Of course, internationally, you can reach out at 727-445-1044. This is Fantastic Friday. Of course, Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got the Dow futures up 28 points, trading at 17,915. S&P futures are up 2, trading out at 2,088. NASDAQ futures back a point and a half at 43.97. U.S. dollar index up 36 pennies, trading out at 99.76. We've got movement in the currency market, soft and hard. Hard currency, you got the gold is up $12, $13, trading out at 12.06, and a little bit of change. Silver up 30 cents. That's up 1 8/10%. Silver. We talked about silver yesterday, that it looked like it was forming a Gartley buy pattern. We're getting confirmation of that, at least as of 9:08 a.m. this morning, with silver being up 29 cents, trading out at 16.47. Light sweet crude is back about 20 cents, trading out at 50.56. Natural gas up just slightly. Having a tough day yesterday. The bottom, technically, not technically, but theoretically, based on the seasonality of it, was supposed to make a low yesterday on April 9th. We'll see how that actually plays out. Now, not making lows, but moving up to new ground out here. It's basically the markets worldwide. So let's check in on those first, just to get a feel for what's going on. Let's go over to Europe first. Now, the FTSE, that's one of the indexes that you and I have been watching. Why? Because it's breaking out above the 1999 consolidation range. That's the yellow line going across my screen out here. That's 69.50.60. It's the second week, 2 out of the last 3, I believe. Let's put this on a weekly chart. I want to give you accurate information. It is 2 out of the last 4 weeks that we have seen a close above that 69.50.60 area. That is important. That is a huge consolidation breakout inside the markets. It is nothing that you and I can ignore. Now, on a daily chart, there's a simple A to B equals CD pattern. That's in play. The B point has not been taken out here just yet. That is at 71.36. 68. That's your B point. No, that's your 1-to-1. The actual B point is 7065. 7065. And you're at 7053 as we speak right now. So it does look like the 71.36 area is where the FTSE is headed to. Let's go take a look at the DAX. As we have been saying, the most bullish case for the DAX was being made simply because the most bullish case is a overbought condition that just simply moves sideways. Moves sideways. Some people will call that distribution. I will call that what it is. And that is the most bullish case for any kind of a market, especially after having made a 1 to 1.618 A to B equals CD. But it just simply moves sideways in order to work off an overbought condition, and then it begins at that catapult, which is what we are seeing taking place today. Right now, you've got the DAX up about, 200 points, 205 points as we speak. The DAX is on its way up to that 1 to 2 A to B equals CD. That's at 12,695. You're 12,371. Bullish, bullish, bullish. We go take a look at the other bullish markets out here. That's called Asia. If we take a look at, not the, which is a great song, the Steely Dan song out there. But we do take a look at Asia. We take a look at the Shanghai. This is the daily chart here for the Shanghai. Let me switch over to no. Where is it? I'm thinking. Is it on here? I don't think I have it on here. No, I don't have it there. We take a look at the Shanghai. That's headed up to the 46.41 level. That's your 0.618 retracement of the move off, I believe, the 2007 highs out there. So it's inside the middle of the floors out here at 42.27 on its way to 46.41. We go take a look at the Hang Seng, strong like bull, up 328 points, 1 2/10% out here. You know, it looks like that really was not a bad tick, and there was about a 1,600 point move on the trading session of April of 2 days ago. Pretty amazing for sure. Where this is headed to, you know, already hit the 27,823, so 28,821 seems to be the target. Now, let's put this on, just to keep this in perspective, let's put this chart on a weekly basis out here. We take a look at this. Take a look at that wide-ranging bar. It does not get, you know, this is on a weekly chart for the Hang Seng. As I pull this back, just to give you an idea of how strong this candle session is, the last time that we saw anything near this size in price takes you back to October 24th, 2011 out there. Of course, price had moved back off of that area, but I don't suspect that's what's going to take place this time. You know, this thing is up over resistance, 24,988. Let's put this on a monthly chart back here. Let's go take a look at some retracements and get a feel. So you got the A to B equals CD. That says that 30,482 is the target. And if we just simply take a look at retracement levels from top to bottom, well, you're at it right now. You're at the 0.786 retracement, but you're coming into the 0.786 retracement area. We pull this off to the side here. You can see that's 27,404. It's closed out at 27,272. You're coming into that level with a wide-ranging bar. What is also taking place now, this is a monthly chart, so the month is not even close to being over. It's only April 10th. But what the Hang Seng has done here, it's closed inside the month of October 2007. So it says 100% move, or the move is what likely is underway. That should take this back to the 31,958 area. All it's got to do is close above 27,404 in order for that to come to fruition. But that is what the move is that looks like is underway inside of the Hang Seng. The Nikkei off 30 points last night. Really not that big of a deal. Well, here's the monthly chart. So that's really what the weekly candle, I think, would look like out here. You know, nothing bearish here. In fact, on a weekly basis, let's put this in perspective. On a weekly chart, because this was an extended condition, when I say the Nikkei extended condition, either A to B equals CD patterns, or if you want to take a look at the relative strength indicator up above the 70 type level, and that was the week that began March 23rd. Now, March 23rd was a key reversal week. And that says that, you know, we should have seen some follow through to the downside. We did not see that. There is nothing more bullish in the market than a failed bearish pattern. That was a failed bearish candle signal. Looks like coming after an A to B equals CD, or very close to it on a weekly basis. The close this week, above 19,778.60, very bullish. So markets around the world, as we have been discussing really all week here, and we'll continue to discuss that because, you know, there are important pieces of information. You know, our markets have gone nowhere. That is not the, when I say nowhere, I'm talking since January 1st out here. That is not the case with regard to markets worldwide. That's why, you know, over the course past week, I said, you know, maybe now it's time. Now we're in that cycle where you really need to be a stock picker versus an indice picker out here. Otherwise, go overseas, because those markets are just simply moving higher out here. If we go take a look at our markets, let's go take a look at the daily contracts out here. Well, here's the Russell 2000. Right now, it's trading into the March 23rd swing point, the top of which is 1265. That ought to be tested today, tomorrow. Well, not tomorrow, but Sunday, Friday, Sunday, Monday. Sunday fun day. How about that? But that 1265 area ought to be tackled. You see it close below 1257, then maybe not so much. But right now it's above 1257, so it says 1265 is the next test. If we go take a look at the Dow out here, Dow futures trading right towards that point of control. They really need to clear that 17,927 area. If in fact they can do that, that offers a promise of coming back and testing the highs here from March the 2nd. Those highs being 18,188. Key level support at this stage, 17,795 inside of the Dow. That area was tested the last couple of trading sessions. Now it looks like it needs to just simply clear 17,927. If we go take a look at the NASDAQ out here, the NASDAQ, it's up above its market profiles from a couple of days ago. If we take a look at it, it's trading into it, is it? No, it's not trading into its most recent swing point. That would be March 20th out there. The bottom of that swing, by the way, is priced at 44.15. It looks to me like that is the target out here. That's the next target. Any close inside 44.15. That offers the promise of 44.72 for you. Nothing bearish about taking a look at the NASDAQ futures. Let's go take a look at the S&P futures contract. Let's wind this puppy down. If we take a look at its most recent swing point high, is it the 20th at 2106.75, or no, it's 2107. The winner is March 23rd. If we go take a look at the swing point bottom there, 2093 looks to be the next target. Any close inside 2093 today? Monday, whatever it might be, that offers the promise of 2107 as being the next target. We take a look at retracements from top to bottom out here. Prices right now at the 0.786 retracement are very close to it. 2091, what we saw was a high of 2090.50 intra-session out here. So it's at an area where it could take some time out. It's at an area where it could certainly blow through. And if it does, then that 2107 becomes the target line inside of the market. If we go take a look at, there are a couple of trades potential trades that I showed you yesterday. One was in shorting the bonds out here. We took a look at the pattern. Here's the current. Well, here's the for those of you that missed it. Let's go back and take a look at it. I'm not a bond trader, but what I would tell you is that if you are a bond trader, you got to pay attention to these patterns out here. Now, on the bottom, just your simple standard 14.3 stochastic out here. But boy, it does a great job of being able to identify the market turns inside the 30-year Treasury. Why, I can't tell you. I just know that it's a pattern that works that you need to pay attention to. You look for the bullish or the bearish signal out here. That's the candlestick. In this case here, the most current pattern that we're taking a look at is one where we saw higher highs being formed from March 24th through the high that came in on April 2nd, April 3rd out there. On April 2nd, by the way, it was on April the 6th. So we have prices moving to higher highs. You have a rising price line. You have a descending stochastic oscillator out there. You get a nice bearish reversal signal on April 6th. What I said was that 50 line. Nifty 50 out here. If we saw that, if we saw the MACD, because price was so close to the tops out here, so close to the highs, my suggestion was wait for the I'll get it out of the stochastic to actually go ahead and close below the 50 level out there. Is that stochastic? Yeah. To close below 50. Well, it did that yesterday. So you actually got your bearish signal inside the 30-year Treasuries. This is lower prices to come, believe it or not. Steve Rhodes with TFNN. We'll be right back, folks.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So we took a look at there really a couple trades we discussed yesterday, maybe 3 or 4 at least. So one of those trades was was in the bonds. So we took a look at that out there. We took a look at that stochastic falling below that 50 level. So that was signaling to us something important. If we see that reverse today, then it's a different message. But right now we got to go with the cards that we have been dealt. We talked about silver yesterday. About the silver was potentially setting up the 0.618 Gartley buy pattern. I mean, truly, in perfection. What I mean by that, let's blow this up on our screen. If we take a look at the swing point low here from March the 11th, and that low out there was $15.26. You run all the way up to the high on March 26th at $17.40. From that low to that high, your 0.68 retracement level is $16.07. The actual low yesterday was 16.10. So you're up by 3 pennies. Not that big of a deal. As we speak right now, and then you also had an A to B equals CD to the downside. It was a 1 to 1.272. A to B equals CD to the downside. As we speak right now, you have a nice big old bullish engulfing candle. All that requires is to close today above 1650. You're trading at 1652 as we speak right now. So silver, which had done all the heavy lifting, appears to be the commodity with regard to the metals that has actually given us the best indication here that the move to the downside is over inside the metals market. And in this case here, now we'd be taking a look at, remember, there's always 5 possible outcomes of any type of a Gartley pattern here. I'm only going to look right now at the outcome that this is turning into an A to B equals CD to the upside. So if we take a look at that pattern, that says that your A point in silver is down here at the March 11th low. Your B point is up here at March 26th, and your C point was yesterday's low. That says that what we ought to do is see silver head on up to $18.25 out there. That would be your 1-to-1 A to B equals CD to the upside. Remember, now that's outcome number 5. It doesn't have to come to fruition. It could just be a retracement of this B to C leg. It could just be a 100% move of that B to C leg, get up to 1741. But I believe that the more likely outcome is this turns into a 1-to-1 or 1-to-1.272 A to B equals CD to the upside. Hey, we just finished 1.272 A to B equals CD to the downside. I'm going with the 1.272 to the upside. 1883. That says that price goes and heads back to the January highs out there, actually takes them out for a bit. Then we just simply will reevaluate the markets if, in fact, that pattern plays out, because that could actually then begin to turn into a butterfly pattern to the upside. But we'll take things one step at a time. The step that we can take right now is you've got a confirmed Gartley buy pattern. If silver falls apart during the day, closes poorly out there, then we won't have that confirmation. But we most certainly have that confirmation now. I expect that it will continue. It doesn't matter in the case of gold or silver what the U.S. dollar index is doing. You've got the U.S. dollar index up 415 ticks out here right now. Of course, the majority of this, well, it's really being it's really a cause of the euro, a cause of the Great British Pound out here. Let's go take a look at both of those. If we take a look at the euro out here, the euro right now is trading back into its swing point. Its most recent swing point looks like that was March the 16th. The top was 106.19. You're trading at 105.90 out here. I do have a 15-minute delay, so my apologies for that, but it's trading somewhere right around that level. That says that the euro is going to go and test these lows, may try to break them out. That's in the 104-ish, 104.5, 104.6 type range out here. That's what it looks like the euro is doing. Hey, if the euro heads south like that, what that's going to do is that's going to go ahead and put some strength into the U.S. dollar index. Now, why is it that you've got gold moving higher in the face of the euro moving lower and the U.S. dollar index moving higher? Remember when we were taking a look at gold trying to break out above $1,000 priced in euros? There's another chart that I go to. I wish that e-Signal and or Ninja Trader had some way for me to just simply switch over and price gold in euros out here. But that price level, that $1,000 euros, gold priced in euros out here, that's a consolidation. So price was traveling in a consolidation. Price gold priced in euros still above that level, and I believe that's why we are seeing the strength out there, because it's not just one currency. Even though gold is priced in dollars, look, if you're in Europe, you're taking a look and you're buying gold, you're looking at it priced in euros out there. And I believe that has more to do with it. If we take a look at the Great British Pound out here, the Great British Pound. So I wouldn't worry so much about the correlation between the U.S. dollar index and gold. If we take a look at the Great British Pound, it is now trading below that key reversal candle from March 18th. Nothing more bearish now than a failed bullish reversal signal. And it closed today below 1.4635 and you're at 1.4620 as we speak right now. That sets up an A to B equals CD to the downside in that currency pair. This is Steve Rhodes with TFNN. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Well, we're off to the races, but Steve-O has no data feed here, so this is going to make calling the markets a little bit difficult. Looks like the S&P is up 3.5 points right now, about 0.2%. NASDAQ is up 7. The Dow must be up a bit as well out here, so okay, so I don't know. Okay, let's see here. So I'll do the best that I can out here. I'm trying to go to Plan B, so truly multitasking. Hopefully you're seeing my messages here. Okay, so what are we going to take a look at here? What are we going to take a look at? How am I going to do this? I'm searching around to see if I can get some things moving here, so give me a moment. Let me switch over to, switch over to the futures contract. What a bummer. So... Okay, so I see some things are starting to move just a tad. My apologies, folks. During that break, I was trying to switch some systems off and go to my backup system. and I'm trying to get that totally done out here. What a pain in the rear end out here. Let me see if this is moving at all. The composite 49.80. Yeah, okay, 49.80, 37. Well, we're pretty close. So let's just go take a look at the NASDAQ composite as we speak. So I'll try to muddle through this 14 minutes out here. So as we take a look at the NASDAQ composite, should be trading somewhere around 49.80. What do we know as we speak right now? In the case of the NASDAQ composite, as you've been watching during the course of the last several days, one of the things that we know, with inside the e-signal system, I'm able to go ahead and take a look at the McClellan Summation Index, which will change directions based on the price oscillator being above and below the zero line. Now, as we speak right now, and again, I don't know if I'm really getting a live data feed through here or not. I know that the NASDAQ composite is priced somewhere right around the 49.80 level, so we're pretty close out here. One of the things that we can take a look at is if there was a bottom that was formed back. So let me get back to the summation index. It ticked higher a few trading sessions earlier in the week. Now, what that means is that the buyers are the ones that have control of the market. So you've got buyers that have control of the market. That gave us an earlier signal than this MACD positive crossover here. So if we take a look at just simply wave counts, we'll take a look at, reversal signals, things of that sort that we've got out here. If we take a look at potential wave counts, right now looks like in today's action, you may be getting that positive crossover. Thanks, Jay. So you got the ES at 2086. I don't know if that was meant for me, but I'll use that as a key level. I appreciate that. At this stage here, thank you. At this stage here, the key level inside of the ES, I think it was 2076. I think the key level to be watching inside the ES, by the way, is 2076. Anything that stays above that, that's really just supporting the bullish outlook. At least a continued move higher is really what I should say at this stage. But you could potentially only be in the second wave on the way up here in the NASDAQ composite. Yet it gave us some more reliable bullish information of a change in trend earlier in this week. I don't think it was the end of last week. It might, but it's possible. I just, if I could get that system going, I could be exact. What I can tell you is as we speak right now, the bulls, the buyers are in control of the NASDAQ composite. That bodes well out there with regard to intermediate term time frames, short term time frames, and so forth. We take a look at the Dow Jones Industrial. I don't know exactly where it's trading. My system shows 17,980.51. I know that is not the case out there. Interactive, connected. Okay. Maybe I need to try disconnecting a couple things. Give me a moment here while I try to disconnect this. Do I really want to do that? Disconnect. My apology, but really the same thing holds true inside of the Dow, and that it is also got this potential crossover going on its MACD. Again, a lagging indicator. It made 4 waves to the downside. It does that. This is the Dow Jones Industrial, by the way. It does that here in the trading session of March 26th. We also know that in taking a look at the Dow's price oscillator and summation index, that it also had turned to the upside out there. So that turned to the upside. That said that the buyers had control, the bulls had control. We're now seeing that, what this says to me is that we ought to at least see the Dow head and test the shooting star combination, evening star. So you've got really 2 sets of bearish reversal signals. That's just simply resistance. That resistance being the high of the March 23rd swing point, which is priced out at 18,205.93. And that is where price ought to run to. Now, let's see. It looks like the Dow's priced at about 17,952. Okay, so it's trading below this area here. Boy, it's really hard. It's like flying an airplane. But without any kind of an engine out here. Let me try to start. Let me try to start that engine before we actually, we're still at a pretty decent altitude out here. Let me see if we can get this thing started, which would be nice. Let's take a look at. But in the meantime, we'll just simply let me see. There's a question inside the Tiger's Den. Well, that's really dealing with this morning's newsletter. So. So I'd prefer not to have to answer that question on the air. Let me just see if this thing will start up. Let me see if E-Signal will start up out there. So there's been power grid issues across the world out there. And it looks like, here we go. So I'm back up and running. Okay, so looks like Stevie is just simply, they're attacking my power grid system. All right, so the Dow, now we're back to flying. Thanks for that. Thanks for putting up with that, folks. Okay, so now let's take a look at the Dow's off 3 points. Not a big deal. The S&P is up 2. The Composite is up 88 cents. The Russell's up $4.50. Let's go back to the currency markets. We took a look at both the euro and the Great British Pound. Let's take a look at the euro Japanese yen. Now, the euro Japanese yen is pulling back this morning. It's coming back and testing the lows here, the swing point for March 13th and or March. Is it March 13th? Looks like March 13th swing point. So this thing, and now our market's moving higher in the face of the euro yen. I mentioned yesterday that you had the markets really had some strong headwind out there with the euro pulling back, and really wasn't until the last hour or so of trading that we saw the markets actually begin to move higher. Same thing holds true for today. Now, there's really two different ways to look at this. And one way is that we've got this divergence going on. Well, right now, you've got the euro Japanese yen, which is absolutely a liquidity indicator. At least it most certainly has. I just don't anticipate that this has changed out here. And we've got our markets pulling back. So our markets are dealing with looking at what's going on overseas, inside of Asia, inside of Euro. Those markets have broken out. They're up above resistance levels, very strong. And our markets are saying, this is not right. And so what our markets are trying to do is there some sympathy going on? What is happening out here? I'm kind of keeping the euro yen over here in check. It's kind of like a weather forecast, where you've got conditions are set up for a tornado. And oftentimes those conditions don't happen. They just fizzle out here. So we just simply have to pay attention. What we have to do, though, is we also have to take a look at other signals inside of the marketplace. Just really trying to stay just focused on just our market. So now I can go back to that summation index, right? If we take a look at the summation index here for the NASDAQ composites, now I can go back to it. We can see here's the price offset. Here's where you actually saw a break above the zero line. That was on April the 2nd. So April the 2nd, so that was last week. That was on Friday out here. And we can see that says that buyers are in control of the market. I mean, that is its message. It looks like the composite wants to try to make a move up to the 49.95 level. It broke above yesterday, with some conviction. Broke above the 0.618 retracement area. Until we see any kind of bearish signal, that's really its message. You can say that we had this wide-ranging bar to the downside, which it did on the trading session of March 25th. The top of that is 5,006. So it would only make sense. 49.95, 5,006 should become its next target. As long as this price oscillator is above zero, even on any kind of a pullback here, it says the pullback is nothing more than just simply normal market breathing out there. It doesn't mean that that the markets have reversed course or anything. If we take a look at the Dow, its price oscillator got above the zero line. That was this week, April the 6th. Now, we haven't seen a ton of movement higher to the upside, but nonetheless, the selling pressure has been met with what? It's been met with buying out here. Why is that? Because this signal, this system here is just simply telling us that it is the buyers that are in control of the marketplace. And it says that it's got much more room to run to the upside. If we take a look at the New York Stock Exchange, it would be very positive today. The highest reading that we have seen since the move above the zero line in that price oscillator that took place on April the 6th. That reading out there was 97.50. Right now, if I take a look at the reading, it's only at 89.05. Any close above 97.50, whether that would be today or Monday, would be really bullish out here because then we would start to have a rising tops price oscillator. And that's not how tops and markets are formed. Tops and markets are formed when we take a look at the wider swath of the market, when we see a declining price oscillator, okay? If you're looking at my chart here, if you watch this on Tiger TV, and price moving higher. Very similar to what we took a look at when we took a look at the 30-year Treasury out here. And that's really the message of being able to use this. Right now, you've got the New York Stock Exchange. It's trading inside of the swing point high from the trading session of March 23rd. That number is 11,070. You're trading at 11,076 as we speak right now. if in fact today, and I don't know where the markets are going to close, but if in fact today the New York Stock Exchange can close inside 11,070, says at least that high ought to be tested. And really maybe what it's trying to do is get back to the highs here on February 25th, and that's at the 11,142 area out here. And really, what has to happen in order for the New York Stock Exchange to really show that it's getting ready to turn out here, and this is the wider swath of the marketplace, you need to see higher price, and then you need to see a declining tops price oscillator. We don't have any of those conditions inside of the market. So only and only if, what could be a change in that? The price oscillator dipping below the zero line. But we're not there yet. The market is not there yet. So with regard to that euro yen out here, it's just something that's one of those tools that just needs to be put off to the side. You've got to pay attention to it. It's nothing more than a weather forecaster, and I'd be your weather forecaster out here saying, look, there's a chance of a tornado, a big tornado storm. It's kind of like those conditions are perfect. You know, it could turn into one of those, what do they call them? Here in Florida, we deal with hurricanes. They call them Category 5s. Don't they call tornadoes? Don't they have those? What's the? It's not the Doppler system, but what is it? It's I forget the name of the system. But don't they have? Is there Category 5? Is that the worst storm for a tornado out there? I guess I should be more up to speed on tornadoes, so my apologies. I think 5 is their upper level as well. So you got the you actually have the conditions. You have the conditions, not F5. Thank you, Jay. So I don't think we've got the conditions for an F5 out here, but you've got the conditions for, you know, potential tornado. F5, if we saw declining price oscillators, that whole 9 yards inside the Dow, the New York Stock Exchange, the composite out here, you know, then sure, maybe. Okay, back to the markets out here now that the system is working, so to speak. Let's take a look at Apple. So Apple's got the iWatch. No crowds that I saw out there today standing in line. So I don't know what it's like inside the stores out here, but no big line. So, but what is Apple doing right now? It's trading a bit lower. Apple's just simply been trading within a consolidation range. You'd almost have to say it's been inside this consolidation since about March the 2nd. So from March the 2nd, the consolidation is between 129 and 122, about a 7-point move out here. Any close below 121.63, that could send off a 7-point move to the downside inside of Apple. Any move above the 129, well, Apple will take on 133.60. If it could do that with some volume out there, then you've got an A to B equals C to the upside. But right now, it's nothing more than a consolidation pattern inside of Apple. So not moving the markets one way or the other. How about gold? Okay, so Goldilocks now taking off topside out here. Again, silver was the one that really gave us a nice message out here. We did not have an A to B equals CD to the downside inside of gold. All we've seen inside of gold was really a test of support. I didn't think at the beginning of the week that it would pull back to that test of support. That's Stevie's yellow line going across my screen, but it most certainly did. So it's pulled back enough of a downtrend over the course of the last 3 trading sessions, enough to make this a big old bullish engulfing candle session. That says that the A to B equals CD that was in place is likely the pattern that's unfolding that would take gold up to 1256. You won't really know that. You know, I've got 2 arrows here. I've got an arrow on Thursday's low, and I've got an arrow on Monday's high out here. One of those 2 is the initiation point of a move, of a typical full moon move out here. Looks to me like it was Thursday's move at this stage of the game. That says gold, once it gets above, certainly the, you'd have to say certainly above, I know I normally use a swing point of 1219.50. I'm going to use the high here from Monday, and that's at 1224.50. We know commercials, we spent some time on that yesterday, what large commercial traders were doing, and they're preparing for a move higher inside of metals. And again, so we don't have to worry so much about the U.S. dollar index, as I discussed, while I had basically no system and wasn't sure really what I was going to talk about. So gold moving topside, silver doing the same out here. We're going into the break. Let's go check out real quickly here the VIX index. The VIX index well below the 50-day exponential moving average. It's priced at 13.16. The key level to be watching today, in my opinion, is $12.59. Break below 12.59. And the VIX runs lower. You say how much lower? Yeah, probably down to 11.53 or so. This is the Rhodes TFNN. We'll be right back.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Welcome back, folks. Dow's up 19. S&P is up 3. Composites up 4 points as well. Russell's up 4. So in the next 2 minutes here, let me just give you what it is that you really should be paying attention to for the day. Very unlikely that the VIX index will get above the 50-day exponential moving average. Even if it does, it would say you'd see a bounce on Sunday or Monday. That's priced out at 1518. Instead, the real key level to be watching is going to be the 1259 level. Any close below that, And it'll just be it'll be the thing it'll be the liquidity that is offsetting the euro Japanese yen that we see. So we've got two liquidity fights going on. So we'll let those two go do their tug of war. If I switch over and I'll take a look at this chart here, this is a 300-minute time frame chart for the ES mini out here, and it's basically been in a consolidation since about 10 o'clock in the morning on March 23rd. Now this is the larger side of the consolidation. That larger side of the consolidation says you're going from 2033 to 2000 and basically 81. We'll call it 83 just to make it a 50-point type consolidation. When you break a consolidation pattern, that says that price, if it's a real breakout, that price you can just simply, as a measured move, add it to either the top or the bottom, wherever the breakout is. In this case here, you can go ahead and add 50 points to 2081. That'll give you your price objective for the ES Mini. I'm using a little bit of a smaller consolidation out there, but really the consolidation is truly 50 points. And I would say you'd be looking at, what is that, 21.31 inside of the ES Mini as a potential price target. The point is, if the ES Mini closes back below the consolidation level of 2081, then what that says, we were taking a look at this yesterday. We were taking a look at how we were looking at really on the 120-minute time frame chart. That was giving us the better signals out here. Let's put this, here's the 120-minute time frame. We were looking at the lower part of this box really holding as support, which is around 2070 out there. You know, if 2070 fails, then that tornado I was telling you about, well, then it's kicked in. But if it doesn't, and right now the preponderance of evidence shows simply that it hasn't. It shows that the market has broken out to the upside. So folks, have a fantastic Friday, fabulous weekend. I look forward to seeing you Monday morning. Take care.